Let's bring in Scott Bauer. He's the CEO of Prosper Trading Academy. He's joining us this morning to talk financial markets. Scott, happy Tuesday. Welcome. Hey, no numbers at the bottom of the hour for us to break down, but one of those weeks where we try to busy ourselves, it seems like, with some of the less closely watched economic data due out, full well knowing the real focus comes at the end of the week, and that's the jobs report on Friday.
Yeah, it's kind of shuffling the numbers beforehand, and I'm not sure that we're going to see anything coming out, any sort of data coming out that's going to, change the Fed's thinking until we get that big number on Friday.
Yeah, I mean, Scott, housing being one of those focal points as we wait for the jobs report on Friday. I mean, it seems to have softened some recently, some of the crazy pandemic trends that we had seen where buyers were purchasing homes, never having set foot over the threshold of that front door. I mean, but this is one of those sectors where you don't necessarily want to see it weaken.
No, we don't, and we have seen it on the decline a little bit here, and that's been the strongest sector that we've seen for the last 12, 18 months or so. So you don't want to see a continuation. You'd like to just see some stability here. There's no doubt about it.
Yeah, and the softening, though, Scott, I mean, not necessarily something to be too concerned at this point because, again, kind of along the lines of what we heard from Fed Chair Jerome Powell in terms of some of these transitory inflation concerns. I mean, these were trends. These were kind of robust conditions that, again, we talk about difficult to sustain mostly.
Oh, there's no doubt about it. I mean, they were off the charts. For the longest time, the sector was left, for dead. And then we saw the last 12 months or so, like I said, they were off the chart. So you're right. I don't think there's a big concern, but we don't want to see this continual decline.
Okay. Speaking of that and tying ultimately to the housing market, I mean, we've got rates. So let's get into some of what's going on in terms of financials there, because one thing I've been talking about is, well, the indices at new all-time highs, a reflection of investors' comfort in terms of where the Fed stands, their transparency, the message they've been communicating. Certainly you could argue, though, as I pull up the charts here, I've got the 30-year on the left, the 10-year on the right. They're in a bit of a zone, very comfortable under these conditions as well, it seems to be.
I mean, it's Goldilocks, right? It really is. It's the story of what the Fed has been doing, like you said, Ben, being very, very transparent about this. I give them a lot of credit for this. And rates have settled into this zone, whether it's on the higher end of the range, the lower end of the range. It's an area that the market has become extremely comfortable. I'm not even going to say complacent, which in my mind would be a bad thing, but comfortable. And that's why you're seeing, the overall market still continue this grind up, to the upside. And reaching new highs, what seems like almost daily.
Scott, headed into the end of the month of August here, oftentimes we see, kind of a quiet period in terms of trading. Certainly the month or the summer months that we saw as far as trading, volatility came off a little bit. We looked at the top of the show about the series, at the series of lower highs that we've seen. But, I mean, it does seem like investors with the indices at all-time highs, COVID concerns, geopolitical uncertainties that have been developing. I mean, investors seem to be still a little bit on the edge of their seats. And we've seen gold. I mentioned the VIX coming off in the series of lower highs, but I mean, Treasury's relatively elevated. And it does seem like investors are kind of positioning themselves for if we were to see a downturn, or at least considering where they would want to be should we start to see some sort of a correction.
Ben, looking at where volatility is in relation to all of the events, all of the external happenings, if you will, to the market, volatility in my mind is way too low. It really is. And so what I always preach to my clients, my students and friends, when you get the chance to buy insurance on a discount, on sale, you do it. You buy it when you can and not when you have to. I think that's what a lot of investors, as what you're talking about right now, are actually doing. Maybe they are on edge a little bit because the markets are at all-time highs and there's so much going on here. So anybody that wants to stay in this market, that wants to participate in this market, but doesn't take the opportunity to buy some insurance, whether that's buying some upside calls in the VIX, whether that's buying some puts in your favorite index, whether it's the Qs, the SPX, whatever it is, because premium is so cheap right now, that's shame on you if you don't do it. Because, we all look for deals when we're out shopping for auto insurance, homeowners insurance. you got a deal right now on insurance in the marketplace right now.
We can see that. We just looked at the daily time frame, the move off of the pandemic highs that we've seen, Scott, and the trajectory lower that it's been on. Here we can see, again, if we dial back a little bit more in terms of, again, we're at historically low levels for the most part, this area below the 20. Now, again, the extreme lower levels being those 9s, those 10s that, I don't even want to go back to thinking about going back to, but certainly those were days to remember. I'm sure you remember those pretty well. S&Ps with a 5-handle range.
That's right.
Let's talk currencies lastly, though, because I wanted to get your thoughts on the dollar. We mentioned rates in a bit of a range. The dollar's been coming off after a failed attempt around 93.50, and kind of a reflection of what we were discussing in terms of the Goldilocks scenario. A very comfortable environment for traders and just not a lot of directional conviction one way or the other for financials in general.
Not at all. And, this is such a surprise to me and many people as well.
Yeah, we were hoping for a breakout.
We were. I was looking for the breakout above 93.50, which has been massive resistance. And, what Powell came through with last week and the Fed came through with last week just didn't support that. So we are going to be in this very, very tight range. That could change this Friday. I think that really can. If we get a super powerful over-the-top jobs number here, that is going to, put in investors' minds, people's minds that, okay, this tapering is going to happen much sooner. I shouldn't say much sooner, but sooner rather than later. That's really what's on the table with the jobs number coming out Friday is the timing of the tapering. Strong number probably accelerates that tapering and probably helps the dollar somewhat. But yeah, I am so surprised that we did not break out here. And you're seeing other currencies across the world really, strengthen a little bit on the dollar's weakness over the last week or so.
Yeah, I was watching the euro into that 117 handle, hoping that we would see some energy there as well. I don't necessarily care one way or the other in terms of position. I just wanted the energy to come back into the market and create a little bit of a stir. Let's talk a little bit about some of the other foreign currencies. Scott, any of the other majors that you have your eye on that you think we should be watching?
Well, as you just mentioned, the euro did strengthen a little bit here. And I think a lot of that is not just the dollar weakness, but some of the inflation numbers that we're starting to see out of the Eurozone, especially Germany. Germany had some really hot numbers coming out here, and there's some concerns there about low interest rate environment that they may have to start tapering or raising rates sooner rather than later. And then, I always look to the Aussie and the New Zealand dollar, which had some pretty decent weeks over the last week, but that's on the heels of them just getting hammered over the last couple weeks based on a couple things, COVID restrictions in those areas, and then the dollar strength that we saw going into Jackson Hole last week. So we've seen some recovery in both the New Zealand and the Aussie dollar.
And the Asia-Pacific currencies are ones we look to in terms of getting a gauge as far as that region. Scott mentioned the Aussie. We're looking at it here. It got hammered, as he said, into the March lows 2020, coming off a bit, but recently selling off and trying to recover after some of those COVID lockdowns coming back into play. And he was also talking the euro currency. Here's a good look at it and how well we just recently found support around 117. If that dollar continues to weaken through the 92, 91 area, opens up a door for a retest of the year lows we saw around 89. That would bring a bid into the euro. We'd be talking about, that 124 handle. Ultimately, if we get above that, we're looking at levels we haven't seen since, we're talking the beginning, spring of 2018. Scott, lastly, Bitcoin, speaking of comfort and a bit of a range that price or products, I should say, have settled into a nice run up into the 50,000 level bid, much like a couple of the other products we were just talking about off recent lows, but also a bit sideways since the latest there in terms of crypto.
If you're a Bitcoin bull, you've got to love this price activity, Ben. The big run up that we saw to 50,000, rejected there, but it has coiled since then. It has just traded in such a tight range since then. And 46.5 area, which is the next support area, that had been some pretty decent resistance. That held when we hit that, at the end of last week here. And now we're in this consolidation phase here. And I really think the Bitcoin bulls are looking for a big pop above 50,000.
All right, that gives us something to watch. Scott, ultimately, those bulls want to see that thing above 65,000. Some new all-time highs would really get them jumping for joy. Scott Bauer, the CEO of Prosper Trading Academy. Appreciate you joining us on this Tuesday morning to talk financials and get ahead of some of the jobs and economic data reports due out later this week. Again, you can check Scott out at Prosper Trading Academy. Let's